Okay, so something pretty huge is happening right under our noses in the crypto markets. It's this quiet but really powerful shift in where all that speculative money is going. And honestly, it could totally change the game for a lot of traders. We're talking about a move away from pure hype to, well, something else entirely.
So let's just get right to it. The big question that's probably on your mind, especially if you've been in the trenches trading this year, is the meme coin party finally over? I mean, we all saw the absolute mania, but things are starting to look very, very different now. And that's because there's this quiet revolution taking place. Seriously, this isn't just about a couple of tokens losing steam. We're talking about a major change where that high-risk, high-reward capital is actively looking for a new place to land. To really get a handle on where we're going, we first have to talk about where we've been. So let's break down what exactly happened with that meme coin fever that just took over everything for a while. To get a sense of the sheer scale of this, just look at this number. Back in July of this year, there was a staggering $34.4 billion in Solana meme coins traded in a single month. That is an absolutely astronomical figure. It just shows you how white-hot the mania got. But now, check out the contrast. Fast forward to last month, November, and that same trading volume plummeted to $13.9 billion. That is a massive, massive drop. And it's not just a fluke, not a one-off bad month. It's part of a really clear, steady trend. And here you can see the whole story in one simple picture, right? The crazy peak in July on the left and the low point in November on the right. Now, what's so important to understand is this wasn't some sudden overnight crash. Instead, it's been a steady migration. Traders have been slowly and very deliberately moving their money out. So why? What's driving all this? Well, it seems like traders are just getting smarter about the risks here. There's actually a framework that helps explain it, called the Meme Coin Ecosystem Fragility Framework, or ME2F. It basically boils the danger down to three huge problems. First, the insane, unpredictable volatility. Second, the fact that a few giant holders, the whales, can dump their bags and crush the price at any second. And third, just how fast these things can die based on nothing more than social media hype. So if all that money is leaving meme coins, where is it going? Well, this is where things get really interesting. It's flowing into a new space, betting on real-world events through what are known as prediction markets. And this number right here, this tells the whole story. The monthly volume in these prediction markets has absolutely exploded. It's now equal to 57% of the entire Solana meme coin volume. And get this, just a few months ago, that number was less than 10%. That is an incredibly rapid and dramatic shift in focus. You can really see the fundamental difference right here. On one side, you've got meme coins, which are driven almost entirely by virality and hype. It's all about social momentum. But on the other side, you have prediction markets, which are all tied to actual real-world events. You're not betting on a funny cat picture. You're betting on things like election outcomes, economic reports, or big tech updates. This is leading to a whole new concept people are calling info finance. The idea is that these markets take the collective wisdom of thousands of people, the crowd, and boil it all down into a single tradable price, which is basically a probability. It's an attempt to turn all the noise and chatter out there into a clear, actionable signal. Okay, so this is all really cool, but let's get practical. What does this shift actually mean for your strategy as a trader? How do you actually play in this new arena? Well, the source material lays out three pretty clear ways to adapt. First, and most obvious, is to just start transitioning some of your meme coin capital over into these prediction markets. Second, you can get a little more strategic and use these markets to hedge your bigger crypto positions. So for example, if you hold a ton of Ethereum, you could bet on a negative regulatory decision to help offset potential losses. And third, this is the really advanced move. You can combine these event bets with on-chain data to get a much richer, more complete view of the market. And look, this isn't just some fringe theory. The market infrastructure itself is already changing to keep up. The source we're looking at points out that major platforms like Aave.ai are already building out and integrating prediction markets. They see where the money and the demand are going, and they're building the tools for it. So let's pull it all together and zoom out a bit. What does this shift really tell us about the future of crypto speculation? Are we finally moving past an era of just pure hype and into one that actually values real insight?
At the end of the day, what we're seeing here feels like it might be more than just another market cycle. It feels different. It could be a real structural shift. It seems traders are getting more sophisticated. They're starting to demand assets that mix that thrill of speculation with real, tangible information. They're rewarding insight, not just noise. I want to leave you with this line from the source material, because it just perfectly nails what's happening. The game is evolving. The dice are changing. The real question for every retrader out there now is, are you evolving with it?